What's up, everybody? There is a lot happening in the housing market world today, including a lot of clickbait articles and YouTube videos claiming home prices will be slashed due to the recent $418 million NAR settlement, which is still subject to a judge's approval, which will eliminate the long-standing standard of a 5 to 6% commission paid for by the seller. One thought is that these commissions were baked into the listing price for the home, so without them, the home price will go down. Now this confuses me, just bear with me for a second. When I list a house for sale, the seller determines the listing price based on the recent comps that I provide for them. So we go over houses that are similar to the subject house in the same neighborhood, what they sold for, and how they differ from the subject house, if they're a little better, a little worse, and based on these comps, the seller determines a listing price. You with me? Just stay with me. So for this example, let's just say the seller decided on $850,000, okay? The listing agreement between the broker and the seller, which determines the commission, is completely separate. So regardless of whether the commission is 6%, 5%, 4, 3, 2, 1%, that's an agreement between the seller and the listing broker, okay? Just stay with me, Because here's where I get confused, and maybe I'm missing something. It's possible, and you can comment below and let me know. So staying with our example, do you honestly think the seller then says to themselves, so I'm saving 3% on the commission, so instead of offering my house on the market for $850,000, which is what the comps defend, I'm gonna reduce the price to $825,000 to the public and just save them some money. Like, do you see that happening? Am I missing something? Because that's not what's gonna happen. The seller will still offer their house on the market at the $850,000 because that's what the comps say, and will net 3% more. So it doesn't affect the listing price at all. Another thought is that if potential sellers think their commission costs will be half of what they used to be, this may influence their decision to put their house on the market, therefore creating more inventory, therefore bringing home prices down. Looking at our example, if that homeowner thought they were going to save the 3% because they're still listing their house for the same price, this may be a reason they put their house on the market. But I still don't think that this is enough of a reason to create so much more inventory that will bring home prices down. Remember, that's all we're talking about right now is these articles and videos saying home prices will be slashed due to this lawsuit. I just don't see it happening. But please comment below because I may be missing something. These changes, if approved, will take place in July and will certainly bring a shift in how commissions are paid. More specifically, how buyers' agents are paid. Will buyers have to come up with even more money to have their own representation in one of the most unaffordable housing markets? Or will buyers simply go without representation in what is most likely the biggest transaction of their life? If you've bought a house before, you understand just how important having your own representation can be. From negotiating terms to inspections, repairs, strategies, overcoming obstacles, dealing with multiple offers, understanding appraisals, saving money on title insurance, and a lot more. A transaction can be easy, but it can also be riddled with complications that a good buyer's agent will be able to navigate through to get you to settlement. In fact, I do think this new normal will weed out a lot of realtors who can't show their value. And honestly, I don't think that's such a bad thing. My fear is that buyers who want representation, especially first-time buyers, but can't afford to pay their realtor on top of the cost of buying a house, will suffer the most. I have a lot of thoughts on this new normal, if approved, and we'll definitely talk about it more after the dust settles a bit, and I can see how it actually affects our housing market, especially home prices, rather than go through a bunch of clickbait articles based on theory and not empirical data. But for today, I want to focus on the current housing market, which is showing signs of thawing, with more inventory reported, the biggest increase in 6 months, according to Redfin's latest housing market update, as well as an increase in price reductions. In fact, if you listen to Redfin CEO Glenn Kelman, he predicts a 20% uptick in individuals listing their properties, but is still cautious about the housing market improving. If you're wondering why my optimism is so cautious, it's just because I've been hurt before, Kelman said. We had a great start in 2023 and just a dreadful end, and that could happen again. We're going to take a look at Kelman's talk with MarketWatch in R.D. Swaminathan's article titled, "The Housing Market is Thawing, but Battle-Hardened Buyers May Be Holding Back," Redfin's CEO says, as well as Redfin's latest housing market update to see what's happening in today's market. And as usual, I will chime in with my opinion as well. So let's dive right in. According to Realtor.com, 14.6% of U.S. homes listed for sale last month had a price reduction, up from 13.2% a year earlier, the first annual increase since May. In January, the percentage of homes on the market that had a price reduction was 14.7%. Sellers are cutting prices, but it just means we're seeing smaller price gains than we would otherwise have seen, said Danielle Hale, chief economist at Realtor.com. Last year, the percentage of homes that had price reductions jumped to 18.9% in October, as the average rate on a 30-year fixed-rate mortgage jumped to 7.79%, according to Freddie Mac. New listings were up nearly 15% in February compared to a year ago, according to Redfin. That's the largest annual gain since May of 2021. They jumped 3.8% on a month-over-month basis in February, the highest level since September of 2022. So with more inventory and more price reductions, you would think the housing market was becoming more balanced. And yet, in most parts of our country, it's still a seller's market. In Redfin's latest housing market update for the 4 weeks ending March 10th, 40.2% of the homes for sale sold in the first 2 weeks, up from 38% a year earlier. Seattle had the highest share among the metros Redfin analyzed, with 77.4% of homes going under contract within 2 weeks. Next came Rochester, 75%, and San Jose, 70.9%. The lowest shares are Honolulu, 8.4%, Greensboro, North Carolina, 19%, and McAllen, Texas, 20.8%. 25.1% of the homes sold above the list price, up from 24% a year earlier. San Jose had the highest share among the metros Redfin analyzed, with 65.3% of homes sold above their final list price. Next came Rochester, New York, 62.8%, and Oakland, California, 62.3%. The shares were lowest in Northport, 6.6%, Cape Coral, 8.3%, and West Palm Beach, Florida, 8.7%. Glenn Kelman, Redfin's CEO, tells MarketWatch that the market is only slightly thawing as listings rise, and that we just can't say we're out of the woods yet. Kelman reflects on the housing market this time last year when we had a false start. Rates dipped to the low 6% range in early 2023, bringing buyers back into the market. Freddie Mac data shows that the 30-year fixed-rate mortgage was 6.09% in early February of 2023. When rates started to climb, buyers pulled back, resulting in the lowest home sales in 30 years in 2023. People seem battle-hardened, Kelman said. Buyers are facing volatility as mortgage rates bounce around, and the lack of a clear view into when rates will fall is affecting their behavior. February was a mixed bag for the housing market and the economy, said Redfin economics research lead Chen Zhao. Housing supply is finally starting to recover in a meaningful way, which is great news for buyers who for months have been competing for a tiny pool of homes for sale. Still, many house hunters are hesitant to pull the trigger because mortgage rates and home prices remain elevated. Redfin reports that new listings rose the fastest from a year ago in Austin, Texas, up 44.6%, Dallas up 38.1%, and Charleston, South Carolina up 36.8%. They did fall in 2 metros, Albany, New York down 2.9%, and Buffalo, New York down 0.7%. Active listings, meaning the total supply of inventory, increased the fastest in Cape Coral, Florida, up 60.6%, Northport, Florida, up 52.5%, and Fort Lauderdale, Florida, up 25.5%. They decreased the fastest in Raleigh, North Carolina, down 24.4%, New Brunswick, New Jersey, down 19%, and Nassau County, New York, down 18.5%. One reason why Florida is seeing such an increase in inventory is that home insurance costs and HOA fees have gotten so high that people are choosing to put their homes on the market and sell them rather than stay and pay them. The rise in listings also suggests that the lock-in effect may be easing as homeowners start to give up their super low interest rates and decide to put their homes on the market regardless of them because life circumstances has required them to move. The daily average of a 30-year fixed mortgage rate was 6.94% on March 13th, down from 6.97% a week earlier and up from 6.75% a year earlier, according to Mortgage News Daily. Mortgage rates are likely to stay high a little longer than expected, with the latest inflation report essentially eliminating any chance of the Fed cutting interest rates before June, said Redfin economic research lead Chen Zhao. Buyers who can afford to may want to get serious about their home search now, as housing costs are unlikely to fall anytime soon. The uptick in listings should be another motivator for buyers. There's more to choose from, and improving inventory may bring out more competition from other buyers as we get further into the spring. Some buyers have already gotten the memo, with mortgage applications finally increasing after weeks of declines. As far as home prices, they continue to rise in most parts of our country despite the uptick in listings. There's just still not enough supply to meet demand. Both new listings and active listings are still below pre-pandemic levels as of February. Redfin reports that home prices last year rose on average 6.7% in the country's 20 biggest metro areas, according to the latest S&P CoreLogic Case-Shiller data. Across the nation as a whole, home prices rose 5%. On a local level, prices increased in all 50 of the most populous U.S. metros, the first time this has happened since July of 2022. So even with all this increase in inventory, the affordability crisis is still at an all-time high. The biggest winners at the moment are Americans over the age of 40 who own their home, have a rock-bottom mortgage rate of 2 or 3%, and are seeing significant appreciation of their home value, Kelman said. He goes on to say they can rent it out or borrow against it. They're the ones who win, and that's the reason why we have a supply crisis. Some of these homeowners are able to finance their next home purchase with cash, beating out the millennials who do need to get a mortgage. The share of all cash buyers rose to a third of the sales in January, according to the National Association of Realtors. The last time the share was this high was a decade ago in June of 2014. So is there hope for Americans who simply want to buy a home who don't have a ridiculous amount of cash? When asked if the American dream of home ownership is dead, Kelman replied, "I never thought the American dream could face such incredible challenges. I'm not willing to say that it's dead, but I do think it's under incredible pressure." The bottom line here, folks, is that it is not looking good for home buyers, especially first-time buyers in our near future. Mortgage rates are high, home prices are high, cash buyers are high, and buyers may have to start paying for their own representation. We're gonna have to find a way to help those Americans who do want the American dream of home ownership and representation in this new normal. Where I am here in the DC area, we are still seeing a pretty crazy seller's market, especially in the DC suburbs of Maryland and Virginia, for those houses that are priced right and show well. There does seem to be more inventory, but it's still not enough for buyers to take their time and look around. If they see a house they like, they still have to jump on it really fast before it's sold. And as for the lawsuit and how the future of real estate commissions will affect our housing market, stay tuned. I think we're gonna know a lot more in the coming months. If you missed last week's video on why Fed Chair Jerome Powell decided not to cut interest rates, definitely check that one out next. Thanks for watching. I do appreciate it. Bye!